Hey traders, this is Blake Morrow with Forex Analytix, and you're listening to the week ahead video for May 14th, 2023. Hope you all are enjoying your weekend. I have a lot to talk about today. Excuse me. There's a lot happening this week. You know, there's no Fed meeting, it's no jobs report, but believe me, there's a lot of data coming out. And matter of fact, there's a ton of Fed speakers. I don't know if you guys have seen this next week, all the Fed speakers that are speaking. We've got Kashkari, Cook, Barr, Goolsbee, Williams, Jefferson, Logan. Friday next week we have Fed Chair Powell. He's also speaking at 11 a.m. Eastern. So just when you think you're going to hang up your hat for the end of the week, there's going to be, the Fed chairman speaking. So that could always move the markets, obviously. And then on top of that, we have the debt ceiling. That's coming up. So much to discuss, so many charts to cover. So let's just go ahead and get into it. And actually, let's start for a moment and let's talk a little bit about the debt ceiling and just discuss this debate. First and foremost, the X date, as far as we know right now, is still June 1st. That means that June 1st, some bills, if there's no debt ceiling raised, if it's not raised, some things might not get paid here in the U.S. That's a risk, and that's going to risk, credit downgrades. Obviously, people not receiving benefits. It's a big deal. What's also a big deal is that we have a Senate break from May 19th through 29th. So if you look at the calendar, that's May 19th through 29th. That only leaves us a few working days. We have Monday, Tuesday, Wednesday, Thursday of next week, then a couple of days just before June 1st to get a deal done. And, a lot of Senate members aren't going to want to leave due to that, trying to get a deal done. Then there's ones that just want to get out of town. So it's going to be really interesting. I'm sure they're going to lock down the Senate and Congress just to make sure that some debt ceiling gets done or it gets pushed down the road. This is from the Cato Institute, and you can see the black line being the debt ceiling from 1980, how it's always been raised. There's been a few hiatuses where they've just kind of said, okay, from this year to this year, we're not worrying about the debt ceiling. But right now, as you can see, we are, this is the US debt. Yes, that's your world reserve currency and the country behind it too. So, obviously it's a very contentious debate right now, and it could indeed, this interesting article says the Kabuki theater, which it really is. It's a big theatrical, game that all of our U.S. politicians are going to have at our expense here in the U.S. Just to try to get a deal done, or at least that can kick down the road. A lot of people are going to have different views, and if you have views, please jump in the comments section down below. Let us know how you feel about the debt ceiling and how it might move the markets. I'll be checking out those comments, so I'll see you there. Let's talk about all the events that are happening this next week and kind of show you some charts that might matter. Let's talk about Monday. So on Monday, we have out of the U.S., we have the Empire State Manufacturing data. Now, I'm going to talk a little bit about the dollar index because first and foremost, let's talk about sentiment of the dollar. It's extremely negative, and there's a lot of bearish sentiment in the dollar. A lot of people are calling for the U.S. dollar to be de-dollarized, and it's going to be the end of the U.S. dollar. And whenever you see that type of talk pick up, usually that's telling us that we might be close to a short-term bottom. And if you listen to the daily shows that we have, if you don't know where they're at, you can find them right here. There's a flow show. That's the European show. Make sure you register. It's free. Then there's our F.A.C.E show, where you're going to get my analysis with the rest of our team throughout the course of the week. If you listen to the F.A.C.E show, you've heard me say already that even my the ladies that clean my house, they asked if the dollar is going to get devalued. When people that are not in the industry, they're not in the markets, they start asking you those types of questions, you're probably near a bottom. And that doesn't mean that the dollar won't continue to go down. There seems to be a very big push against the dollar by a lot of different countries, but usually When everybody gets this bearish, sometimes the tide comes out and you see who's not wearing their shorts. And in this case, you might see who doesn't have enough dollars in their portfolios when the dollar actually rallies. You notice we're above the 50 DMA. We're trying to carve out a low around the 100.80, 101 level. It does look to me that we are in a range. If I had to guess, we're probably in a near-term range, maybe more of a bearish consolidation before we eventually break down. But remember, if the stock market, and we'll talk about where the S&P is at, we're going to talk about some of the key events this week. If the S&P moves lower, it could support the dollar, and that's one of the things that you have to keep in mind whenever you're trading the dollar. It is the reserve currency of the world, but also it's a risk aversion tool as a result. So dollar is picking up a little bit of steam. Let me delete this fib level. I'm going to put a new one on there for you. From these are the drawings from last week, so you can see we're at the 38% retracement. If you're if you use Forex Analytix, we go through this bias chart every day. You can see the dollar. We talk about all of these different instruments. This is exclusive to the Forex Analytix subscribers. You'll see the 102.40 to 102.80 big resistance. 102.40. The reason why we wrote that down is it is a 38% retracement. You can see it right there, the 38% retracement. So if we start breaking above that, that might open the door for a rally back up towards, maybe the 103.60, which is the 618, and then also the 200-day moving average, which would be the upper end of this, what I feel is a bearish consolidation trading range of the dollar. I mean, it's a pretty wide band. You think about 100 or basically 101 to 106. It's a pretty wide band for the dollar. So just something to keep in mind. Now, Monday night, we have to think about what's happening Monday night as far as data goes next week. We're going to have like Chinese data and a lot of Chinese data at that. If you look at we can look at the US dollar CNH. It's not really what I want to look at right now as far as a trading vehicle, but the US dollar CNH tends to actually bid higher or go up when there's a little bit more risk aversion. The dollar tends to firm up against the renminbi or the yuan, and you'll notice we're above the 200-day moving average. But on Monday night, we're going to have industrial production, retail sales, unemployment, and fixed asset investment, maybe a couple other pieces of data out of China. But that's going to be Monday night, so keep that in mind. It could be a market mover. If you go to Tuesday morning, it's actually Monday night for me. We have UK employment data. Now, the one issue that I have with the sterling right now, and I'm going to draw something for you, is that the sterling really turned lower after the Bank of England, and this is setting up more of a false breakout on a weekly chart. So this is a daily chart. You can see how we're back down at what I consider really important support here. Matter of fact, let me go ahead and let me remove the camera here so you can see a little bit better. This is an ascending channel, right? We're at channel support. Really key level of support is going to be coming in just below around 124. We start getting below 124, and that's going to look rather ugly. Now I want to show you just the weekly candle, and you'll notice here, and let me grab this this little circle, and I'm just going to put it right here. That's going to end up being like a false breakout on a weekly chart. I mean, the weekly candle, that's already kind of not a bearish outside day, but a Morrow closing black candle, which is a bearish candle in any which way you slice it. And with that being said, I think if you look at the dollar index, and I showed you what the dollar index looks like, and then you start looking at the sterling, you gotta start thinking, the sterling could end up dropping below like the 50 DMA here, back below 124, and it could be a bearish look for the sterling going into next week. Now, also what's happening on Tuesday morning, remember this is Monday night, we're going to go into Tuesday morning. We're going to have Canadian inflation data, so Canadian CPI. Now, look at the dollar CAD. Notice how we're in this triangle type of formation. We're back at the 50 DMA. You can see it right here. If I had to guess, I guess we are developing some sort of harmonic pattern that could put us right back up at 137.50 or the upper end of this triangle. So I think that's something that we have to keep in mind, especially with such important data if inflation continues to fall globally, we saw here in the U.S. it's starting to ease up, and how about if it's same things happening in Canada? We could see that dollar CAD really spike up and challenge maybe the 136.60 level, some of this horizontal resistance right through here. And then a break above that, take us right back up towards this triangle resistance. Since it is a triangle, we're in the apex of it. I have to imagine, at least at this point in time, what's gonna drive us out of this the apex here. And I'm not sure if the CPI is gonna do it, because we're pretty much in the middle of the triangle. So that CPI will probably get us to the lower end of the triangle, maybe the upper end of the triangle, but I don't know if it's going to force an actual breakout this time around. But also, just to let you all know that actually on Friday we have Canadian retail sales. So just keep that in mind, especially if we're at the upper end or lower end of this triangle going into the end of the week. Maybe that's the catalyst that drives us out of this triangle. But speaking of Tuesday, happening right at the same time is going to be retail sales, and this is going to be important data for the U.S. because we want to see how the consumer is faring in this high inflationary, or at least what has been a higher inflationary environment. Yes, inflation seems to be subsiding. There's a lot of debate whether inflation is going to stick around or we're going to get into some sort of deflationary environment. But regardless, the U.S. consumer is being forced to make choices amongst paying the mortgage, or do they let their car payment go and let their car get repossessed? Credit card debt, do they let that go, but so they can put food on the table? There's a lot of these pressures that are being put on the U.S. consumer where discretionary spending starts to come out of favor. And since we're talking about retail sales, there's some important earnings at the end of the week, which we will discuss because it has to do with consumer spending habits, and we'll talk about that here at the end of this show. So anyway, retail sales, that could be another driver of the U.S. dollar as we go into Tuesday. Whether we can make it back up towards this 200-day moving average, or perhaps we might actually slide back towards some support in the dollar before ramping up again. Also, Tuesday night, for those of us that are in the United States, Wednesday morning, out of Australia, you're going to have wage price index. Now, look at the Aussie. I have to mention, what a failure in the Aussie dollar. Just a huge failure at the 38% retracement. If you're looking at the Aussie, you're probably focused on copper because, those of us that are, if you follow me on Twitter, you probably saw me, mention how the copper's breaking down. And as it broke down, the Aussie came under pressure as well. So we're nearing really critical support once again. Now, why is this support so big at 65.50? Well, if you forget, let me go ahead and draw it out for you. You take this low back here from October to the high right here in February. That's a 618 retracement at 65.50. So if we break this support, you can see it right through here. If we break that support, that's going to be really, in my opinion, really bearish for the Aussie dollar. And again, we do have some wage price index coming in on Tuesday night, which the market's going to be focused on. But more importantly, on Wednesday night at 9:30 p.m. Eastern, which I'm going to try to be in front of the computer for this, we have Australian employment at 9:30 p.m., which will greatly influence the Aussie dollar because it's going to really help the RBA make decisions on monetary policy moving forward. Now, I need to mention this. If you guys haven't checked out Forex Analytix, make sure you do so, because this is the chat room you'll see here. This is like our general chat room. You can see all of us just discussing, talking about, the markets. This happened to be on Friday, posting different charts, that was from John, and, you can see from Craig right here. And, we discuss everything, about markets in the general chat room. But then you have the news and research room, the S&P room, you have the trades room, you have the macroeconomics, or we call flowonomics room. But check out the trades room. Oops, clicked the wrong room there. Let me get over to the trades room again. If you look at the trades room, you can see what positions I'm in. I update this board every time I make a change when I'm closing out positions. So you can see that when I open positions, I put them in there, and then when I close out positions, I share with you, all my gains, all my losses. You can see what I'm running, and look, you don't have to mimic what I do, and I don't expect you to. But having an idea of what myself, other traders, other members are doing, that's important when you're trying to make your decision, because you can say, well, I definitely respect what Blake has to say about the Aussie dollar, and he happens to be short. Maybe I shouldn't look at going long, or maybe I should just ask Blake in the general chat room why he's going short when I'm actually thinking long. That's what these communities are for. So make sure you leverage that. One way to leverage it, all you have to do is make sure you check out the Trader Funding Program, because if you go into the Trader Funding Program, you want to learn how to trade our money and not risk your own money, and make either 75% of your returns and only share 25% with us, or up to 90% of the profits and not take any of the risk. Well, check out the Trader Funding Program. You can see what account you want to try to qualify for, because when you do that, you automatically get included for a period of time into the Forex Analytics community. So this way you have trade ideas, you have people like myself and other teammates of Forex Analytics to talk to, other traders in our community that have been with us. Some of them have been with me for 20 years. You can actually talk to them, ask them their questions, their opinions. That's the great thing about having a community. So if you want any information on the Trader Funding Program, make sure you check it out. Check out the videos that we have attached to those as well. All right, let's get back into the charts, because like I said, on Wednesday night, since I do happen to have some open Australian dollar positions going on, I'll be in front of the computer watching the Aussie dollar rather carefully, because I'm looking for an eventual breakdown of the Aussie dollar, especially given the fact that it's been stalling at that 38% retracement. Remember, this 38% retracement is a very shallow retracement. Matter of fact, Benedict in our chat room, he pointed this out the other day, and he drew the tops of those wicks, and that really rejected resistance. And you can see the Aussie fell from grace pretty rapidly, even though the relative strength is nearing oversold. Okay, continuing on with the rest of the week. And by the way, if you think that this video is very helpful to you, in your week of trading, and by the way, we still got another half of the week to cover, make sure that you give myself and the team a big thumbs up. Comment down below in the comments if you have any questions, if there's anything that I'm covering. Maybe I missed something, because I'm definitely not perfect, and I'm gonna miss things, especially about all those Fed speakers. I'm sure I missed a couple of Fed speakers in there, but and some of the moves that are happening in the market. But comment down below, like this video, subscribe to the channel so you don't miss any of these videos or our daily content on our shows. It's free to do so. It's free to do all those things. So do that. All right, let's continue on. So moving into the remainder of the week. So on Thursday, we have, going back to the dollar, because we actually have unemployment claims. Now, the unemployment claims, I don't know if you guys have seen it, but the unemployment claims data is starting to tick higher. So we're starting to see that the unemployment claims really start to move up, and that should worry you about the U.S. labor force in the months ahead. It's not something that I'm super worried about right now, but it is worrisome that we are starting to see that number increase every week. And this week, I think it jumped up by another 20,000. So that's something, like I said, should be on everybody's radar. Those weekly unemployment claims are going to end up being volatility events like they used to be in probably the months ahead. So just keep that in mind. Also on Thursday, just so everybody knows, it's a European bank holiday. It's Ascension Day for German banks and French banks. A lot of European banks are going to be closed, so might see reduced liquidity. But let's talk a little bit about the euro, since we've been talking about the dollar index, but you can't really talk about the dollar index without talking about the euro. So the euro's under a lot of pressure, and you can see this, you could call it a wedge. It broke lower. Some people are calling it a double top. Some people are calling it a triple top. I don't really care what you call it. But what I will tell you is this euro, if you take it from those highs to this support right here, you can see it right here, okay? I call that a range extension. That means that the lower end of the range was here, the upper end of the range is here, so that points to a move down to 107.50 roughly, okay? Now, the reason why that's a big deal is because if you look at the euro, there's a lot of people who are very bullish the euro. You can see how we are now below the 50 DMA, and we broke this trend line. That trend line is actually held a couple of different times. Held there, we broke out, dips, we held the trend line, and we're back at it right now. So what I want to say is if we do trade into new lows, we break last week's lows right out of the gate, that's going to be a bearish event, especially on a daily close, roughly below 108.50. If we start closing below 108.50 on a daily basis, it's going to be a bearish event for the euro going into this next week. The next target should be down there at that double top, triple top range extension low around 107.50, which is about 100 pips below where we're currently trading right now. All right, let's move along. And also on Thursday, those of you trading the dollar MEX, now I want to show you the dollar MEX and this channel resistance, or excuse me, channel resistance, the channel support that we're on. Now you'll notice if you take this low right here on the March 8th low to the high here in March, basically is the March range, we're at the 127% extension and the lows, and if you look at relative strength, it is also divergent. So the reason why I bring that up is because we have Banxico rate decision coming up on Thursday. Banxico is expected to keep rates steady at 11.25%. Yes, 11.25%. However, if you look at the Euro Mexican peso, we're at a lot of horizontal support, right? Dollar Mexican peso, key fib level. If they come in dovish at all whatsoever, we could see that US dollar Mexican peso, especially with the technicals, the divergent relative strength, we could actually see it, push back up towards 18 going into the end of this next week. And like I mentioned earlier, Friday we do have Canadian retail sales, so obviously Canada is going to be on the radar once again. Now I want to, before I move on to gold and cryptos and a couple of the stocks that are reporting earnings, I do want to talk about the US dollar South African rand. You might remember this chart from a while back. Let me go over actually to a weekly chart. Nice cup and handle developing. You can see it like that. But more importantly is we've got this breakout and we're challenging the highs, the all-time highs right here from March of 2020. The issue is that the cup and handle point's a lot higher than where we're at. So I mean, if you look at a measured move of the cup and handle, it looks like this, which are we going to 22? I mean, maybe, if the US is proved right as far as they're blaming South Africa for supplying Russia with weapons, if that ends up being true, and which we're not clear at this point, there's a lot of news running around over the weekend regarding this, but if US puts sanctions on South Africa, as they are dealing currently with a lot of energy issues and blackouts that are plaguing South Africa as a country, you throw some US sanctions on top of that Barbie is an Australian term, right? Barbecue, yeah. Throw some sanctions on top of that, you could actually see a breakout of the US dollar South African rand. We could challenge at least this upper end of this resistance. Now I know if you follow me Twitter, you've seen it, but I just wanted to give you a kind of a heads up on what the some of the upside targets might actually look like moving forward. It is an emerging market currency, and it is very volatile. So just keep that in mind. Now, I do want to just cover gold really quick, because gold is at really important channel support. You can see it right here. We're just really near channel support. And considering the fact that we're really rejecting these all-time highs, if we start breaking below, 19, I'm looking at 1990, just 1990. If that level breaks, I think it's going to open up some downside for gold. So just keep that in mind, because that would be supportive of a continued U.S. dollar strengthening. Also, speaking of, I want to go to cryptos really quick. I just want to show you really fast. You notice Bitcoin here, we're at that 38, well, we're below the 38% retracement. This is a big rounded top we've been talking about the last couple of weeks. So it looks like Bitcoin's going to, pick up some steam, maybe back down towards 24,000. Look at Ethereum. We're nearing that 38% retracement as well. So if we start breaking below this 38% retracement on Ethereum, that's probably going to open up some downside there too. So, crypto weakness might coincide with gold weakness, also coincide with dollar strength. Last couple of things I wanted just to mention is we do have some earnings from Target, Home Depot, and Walmart. The reason why I bring that up is because, actually that's not the chart I wanted to bring up. I want to bring up these charts right here, because it's going to be measuring, the consumer different ways. Walmart and Target, more, just everyday consumer staples. The Home Depot earnings might tell us a little bit more about the housing market, because the housing market continues to slow down. Remodels might start picking up, but if people don't have extra money to spend on remodels because they're spending all their money on inflated prices at the grocery store, and those earnings become a little weaker or show to be a little weaker, it might tell us more about the health of the U.S. consumer. But notice that the S&P is really stuck in this range. This 38% retracement remains very critical support for the market. If we break below that 38% retracement, then in my opinion, we are in a much bigger range in the S&P. That takes us down to like 3750 to 4200. That's a bigger range that I think is in play. Now, obviously, we could still break out to the upside. Don't write off the stock market yet, because we are within probably days, if not a week, week and a half, of coming to some sort of resolution, good or bad, with the debt ceiling. So that could definitely push us out of this. This is 40.45. This is the support here, 40.45. Upside resistance, 4,200. A break of either one of these levels could really pick up a breakout in the S&P or a breakdown in the S&P, right back into the range. Now, I'm telling you all this because I'm also looking carefully at the NASDAQ 100. Why am I looking at the NASDAQ 100? Because we continue to grind higher, but this week's price action really showed us that we're in more of an ascending wedge, because when you hit new highs and then it reverses, hit new highs and reverse, that's just telling us that we're in a wedge. And now this is an ascending wedge. So ascending wedges tend to be more bearish by design. From a probabilities or a percentage standpoint, there's probably 60-65% chance of a breakdown and a 35 to 40% chance of a breakout to the upside. So what that says to me is that because we're an ascending wedge in the NASDAQ 100, and that has been, that's where all the strength has really been in the markets. If we really start to roll over, that could weigh on risk, it could weigh on the S&P, and it could really have a lot of influence, not only in the dollar, but also in the yen, in yields. You could see a lot happen as a result. So, this has been a longer video than normal. I hope you guys and gals have enjoyed it. And I want to thank you all for spending your time with me. I know this is very valuable time to you over the weekend. So it means a lot that you spent your time with me. So give me a thumbs up if you like this video, subscribe to the channel down below, and make sure you catch me and the rest of the team Monday morning on the Flow Show if you're in Europe, and if you're in North America, we'll see you on the F.A.C.E show on Monday morning. Have a great remainder of your weekend. Take care. Trade safe. Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.